Ladies and gentlemen, welcome to M&F Forex Traders. Matthews here. I hope you have having a great day, and I hope you're having a very good new year. I want to wish you a happy new year. I wish you great a great trading year. I wish you success. I wish you great health, and I also like to thank you for actually being with us for this while. Thank you for your support. Thank you for your subscription, and also thank you for watching our videos. All right, and I hope that you find value in our videos, and yeah, we continue to provide you that value so that you can become a better trader at the end of the day. Okay, so today I want to talk about the Holy Grail, as you've seen from our title. All right, I want to talk about the Holy Grail of Forex trading. Of course, I'm sure you figured it out already. It's not a strategy, it's not an indicator or anything like that. All right, but it's actually something which is less talked about, but yet it carries so much importance. Okay, it's risk management. Okay, so this is the most important thing. Okay, when it comes to forex trading, this is the most important thing, but it's not talked about like that. All right, because most people focus on strategies. They're always trying to find that holy grail strategy that to make you win 100% of the time. Okay. By the way, you don't need to actually you don't need a strategy with 100% win rate or 90% or even 80% for you to actually become successful at forex trading. You can actually become successful at forex trading with this strategy which gives you a 40% win rate, even less. Okay, you can actually become successful. Okay, so please stick around as I walk you through what I'm going to tell you today. Okay, I hope you actually enjoy this video. So most of us are always trying to like win big. Most of us, because we've seen others out there trading in a particular way where like they take a lot of trades, like they take multiple trades of the same pair they're trading, all right, just try to maximize their profits. But the one thing that they don't put into consideration is, what if that trade doesn't go right? What if that trade goes wrong? What happens? They end up panicking, they end up stressing because they've not accepted and internalized the risk. Okay, putting a stop loss is one thing, and accepting the risk is another. Okay, so it's important for you to actually, before deciding to take any particular trade, make sure you accept the risk, make sure you predetermine the risk and accept the risks. Okay, because it's that important. It's very important for you to actually be able to accept the risk and put that stop loss there, because it's going to prevent you from a lot of unnecessary emotions. Okay, and remember, it's important for you to be able to risk what you are what you can afford to lose on a particular trade. Don't hope to win. Okay, you and I know by now that Forex is a probability game. It's a game of probability. Nothing is for certain. Even if you have a strategy which is very good like we do, we cannot predict exactly what's going to happen in the market. We just have an edge. And what is an edge? According to Mark Douglas, an edge is nothing more than a higher probability of one thing happening over another. Nothing is guaranteed that this trade is going to work. Nothing is guaranteed that this particular trade is going to work. What we can know is that we have a higher chance of winning over a series of trades, which is the most important. It's not on a trade by trade basis, but it's on a series of trade, and we're supposed to shift our mindsets from trade by trade basis to a series of trades. Okay, when you shift that mindset, it's going to be different. You're going to look at it in a different way, because you can put so much hope on this particular trade and put so much risk on it with hope that it's going to work, because the truth is we don't know if it's going to work or not. The only thing we know is that we have a higher probability of winning. Okay, so it can be 70%, it can be 80%, it can be 50%, it can be 40%. We don't know, depending on the strategy, of course. But if you know that over a series of trades you're going to win, then you don't have to worry when you're going through losses, because you know that that winner is going to come. Okay, so I want to advise you today is that what I want to advise you today is that please make sure that you predetermine your risk before entering into a trade. Make sure you use a risk calculator, a peep value calculator. Make sure that you use that calculator so that you calculate how much you are willing to risk per trade. Okay, so today I want just to give you an example of how you can do it depending on your capital. Today I'm going to just use a $1,000 account as an example, just for easier mathematics here. Okay, so for example, you have $100,000 account with a $1,000 account, right? And let's say you have a strategy that gives you a 40% risk, 40% win rate. Okay, someone will look at this with like, this is too low. I can't have a strategy which actually wins like this. Okay, that's okay. All right, and then your risk is going to be 2%. Right, you're going to be risking 2% per trade. Okay, so if you took 10 trades, according to this system, you're going to lose 6 of them, and you're only going to win 4 of them. And let's see how it is. And of course, I'm going to show you our strategy. For example, if you look at this strategy, right, if this setup right now, like I have a lot of these setups like this. Okay, so this was a trade on copper, and this gave us over 1 to 7. Okay, but to make things easier, I'm going to actually just give you a strategy like this one. It gives us, it actually gives us. Let me just show you more examples. Like we have, this is more than 1 to 5. This is more than 1 to 5. Okay, we have all our setups are more than 1 to 5. I don't take setups which give me less than 1 to 5. If you can just check, all right, you can see for yourself. No setup that I take has a risk to reward ratio of less than what? Less than 1 to 5. So I'm going to use 1 to 5 as my basis, like as a fixed variable that I'm going to use. So for example, okay, I take 10 trades like this. Okay, I take 10 trades like this, and 4 of them win, and 6 of those trades lose. So when looking at win rate, you would have actually lost more than what you've won. Okay, you'd have lost how many trades? 6 trades, but you'd have won how many? 4 trades. But look at the difference. So if I'm risking 2% of my account, and my account is $1,000, meaning my risk is $20, right? So if I lose $20 times, let's do the math together. So $20, right? Multiplied by 6 times. How much is that? I'd have lost 120 US dollars. Okay? So meaning after a series of trades, after taking 10 trades, I lose 6 trades, right? I've lost more than I've won, but on the loss, my loss is 120 US dollars. Okay, so my loss right here, net loss after after 20 trades is $120, right? So net loss here is $120, right? After taking how many trades? After taking how many trades? 6 trades. Okay, how about if only those 4 trades reach their take profit? And remember, we're risking how much? $20 per trade as that's our risk. Okay, so if I those 4 trades, that's one trade. If I'm risking a $20 per trade, how much would I be? What lot size am I going to be using? Okay, so I'm going to give you an example. On this particular trade, we're trading Euro USD. So what you have to do is every time before you take a trade, you head over to, for example, My favorite is my FX book. Okay, I love the calculator. So just go to the my fxbook.com and you find the calculator. You come here, you find the calculator there. You don't have to be signing in for it. Actually, have access to this. So you come here, you get your position size calculator right here. Just click here. It will take you to this calculator right there. Okay, so it's important. This is very important, right? So assuming let's remember we said our currency is of course going to be dollars, US dollars, and then our trading account is $1,000, right? And our risk remember is 2%. Okay, and then our lot size, our stop loss in pips. So for example, we have a 20 pip stop loss. Okay, once you input these figures, it's going to automatically give you what lot size you're going to use. Okay, so for example, in this particular one, it's going to give us how much? 0.1. Okay, which is like $1 per pip. Okay, this is like $1 per pip, right? So and the market, so I hope that's clear, you guys. Just come here to my fxbook.com, go to the calculator section, input the figures there. Make sure you have your stop loss in place in terms of pips, how many pips your stop loss is. You come here, you enter how much you're risking and the pips. Then it's going to, then you just hit calculate here and it's going to give you the figures here. So my risk is $20 and I'm going to be using this lot size 0.1, which is uh, $1, right? So that's how it is. Meaning on that particular trade, per pip, I'm gaining or losing $1, right? So if I lose that $1, meaning I'd have lost, if my stop loss is 20 pips, I'd have lost $20, right? So if I win that trade, which gives me a risk to reward ratio of 1 to 5, meaning okay, if I was risking $20, meaning it's times 5, right? So times 5, meaning I'm making $100. Okay, so if I'm risking $20, meaning I'm going to make $100. So if I win 4 times, meaning I'd have made how much? I'd have made, so net profit would have been how much? Okay, this is before the calculations, and then check. I've lost. I've lost 6 trades, but I've only won how many? 4 trades, but I'm still running in profit. So if we do the math, uh, you get, so this is times 4, right? Which is 4 times 4, which is 400. So 400 minus 120 pips, $120, I still remain with 250. So this is meaning my profit here. This is good. This is supposed to be net profit now. So my profit would have been 250. This is 250. Is it 250? 280, sorry. So that would be 280 US dollars, right? Guys, I've lost. So this is not net. So I'm just delete that. I've lost more than I've won, but I'm still making money. How cool is that? Check. I've lost 1, 2, 3, 4, 5, 6 trades, and I've only won 1, 2, 3, 4. Okay, I've lost 120 US dollars from taking 6 losses, but because I was risking the same amount on these particular trades, right? And then I won only 4, and these 4 trades reached their take profit. I make $400. And if you remove the loss there, you're going to remain with how much? A 250 US dollars. Even if you are losing, you're losing in terms of trades, number of trades. But in terms of profit, you're still going to be profitable. Why? Because you are consistent with risk management. But this is where it gets difficult, guys. You have your first loss, maybe you don't have you don't matter all that much, right? How about the second one? Okay, how about the third one? You get like maybe you have a winner and another winner, and then what if you have a loss, another loss here, another loss? How many of us can stick to our strategy, to a risk management strategy of risking 2% per trade? Very few are doing that. Hence, we have a lot of people failing. Okay, this is the reason why most people are actually failing, because they can't stick to their risk management. They can't stick to the risk management. It sounds very simple right now, but it's the most difficult part, because it comes with a lot of emotions. It's actually very hard for us traders to stick to our risk management rules when we are undergoing a losing streak. Sometimes you can even have more losses. Like you can even have out of 10, you lose 8 of them. But as long as you are sticking to a risk management, check out, even if you lost 8 trades, right? So 8 trades, you're risking $20 on this particular trade, and you lose 8 trades, you're going to would have lost $160, right? And you win 2. If you win 2 and you're on each trade, you're making how much? Remember, you're risking $20 per trade, and you win just 2 trades, right? And all these 2 trades reach their profit target, meaning on each particular trade you're going to win $100, and you win 2, meaning you make $200, right? Check, you lost 180, but you win $200. You lost 8 trades, but you're still profitable. How many of us can do that? How many of us through, can stick to our risk management even when we're going through a losing streak? It's challenging mentally, it's very challenging emotionally, okay? Because want we want that particular trade to win so that we can get back our money. And most of us, what we end up doing is that we end up trying to put so much risk on on that particular trade, because you've lost so much and you think that particular trade is going to win. It doesn't help, guys. It doesn't help you in any way. Okay, it's important for you to stick to your strategy, for you to have the confidence to stick through your losses in your strategy. You have to have back tested your strategy. You need to have seen it work. Okay, you have to have no doubt that that strategy works. And if you know that it works, the only thing you can do is stick through it when it's going through a losing streak. Stick through it, stick to your rules. Make sure you're risking only what you're supposed to risk on that particular trade. The first thing you're supposed to actually think of before anything else is your stop loss. Where should I put my stop loss? And once you've identified your stop loss, what do? You know, okay, how many pips is my stop loss? If it's 20 pips, okay, great. If it's 20 pips, how much is my capital? I come here, go to your calculator, all right? Come here. It can be a different pair, it can be anything. So, for example, maybe I come here and look for another pair. Let me like get which pair? Let me get GBP AUD, right? So, of course, different pair will give you different results. So you don't have to use a standardized lot size on all pairs, right? They have different ways. So you have to make sure that you actually calculating every trade every time you're going to take a trade. So if you're risking 2%, you come here, and this time around maybe your stop loss is 15 pips. Just do that. You calculate, and it's going to show you. You see, here you're going to use $1.80. Okay, what has happened? We've reduced our pips, and we've increased our lot size, and ultimately the risk is still the same. The risk is still $20. Why? It's because we've reduced our lot size, and that's when we can actually increase our lot size, reduce the number of pips, and then we can access this one is going to automatically what? Increase. All right. So this is how it's supposed to be done. Every time you take a trade, make sure you know exactly what's on the line. If you know exactly what's on the line and you accept the risks, you're going to have this stress-free trading career. Remember, guys, risk management will have a direct impact on your trading psychology. It will affect you either positively or negatively. Okay? Sometimes you may even fail to sleep because you've not accepted the risk on that particular trade. You keep checking through your phone. You want to monitor every move that the market makes. Why? Because you've not accepted the risks. It's dangerous to play it like that. This is a game of probabilities. We don't know which trade is going to win. Even if we know that we have a 40% win rate, we don't know which one is going to be the face, which one is going to be winners, which one are going to be losers. We don't know that. So the only thing we know is that we're going to win 40% of the time. And when we know that, why should you stress about the outcome of an individual trade? Why would you be worked out on the outcome of an individual trade? You don't have to do that because you know that you're going to win at the end of the day. So another most important part is actually risk to reward ratio. Make sure that you only focus on a setup that gives you a better risk to reward ratio. When you do that, even if you take a lot of losses, you still be going to just take few wins and they can wipe out all the losses. That's what we want. Okay, want to take that one good trade that can actually can rub off 5 trades which are losers. That's what we want. And for you to do that, you need to have a strategy that works like that. And ours does. Okay? So ours can actually go up to 1 to 10, 1 to 15 risk reward ratio, like that. It's important to have a risk to reward ratio which is actually bigger, such that when you have a win rate which is this low, you can still be profitable. You don't need a strategy with a 90% win rate. That doesn't even exist. If someone is trying to tell you that I have a strategy with the 90% win rate, that's not that they're about to get your money. They're just after your money. Not telling you the truth. I'm not being honest with you. There's nothing like that. So even best traders out there have a strategy with maybe 60%, 70% win rate. Okay. And everyone undergoes through losses. But it's so interesting that people are only showing their profits, right? They're always showing you, oh, us we're winning here, which is dangerous because they're just trying to catch you. They're just trying to get your money so that you can go to them and actually be able to buy a course like that. Okay. Here we're telling you the truth because we want to be honest with you. Follow my Telegram, follow our Facebook channel. We post even losers. Why? Because we're not trying to sell you a, a get rich quick scheme that you think you're going to make money every time. No, it doesn't happen like that. Losers happen every time. The most important thing that you can do for yourself is take care of your downside. Take care of your losers. That's the most important. If you can actually take care of your losers, automatically you're going to become successful because no matter how many times you're going to lose, as long as you have a strategy which works, you're going to be positive at the end of the day. But remember, we don't know which trade is going to win. The outcome of an individual trade is purely random. Okay, but over a series of trades, we know that we are going to win. Of course, we know that from back testing and forward testing it. That's how we develop the confidence in the market. I liked one quote. I don't know from who wrote that. He talked about. He said, "I have little to no trust on the outcome of an individual trade, but I have confidence, super confidence of a positive expectancy of my system over a series of trades," which is the most important and most critical part that people don't actually get. If you take a trade right now, I don't know what's going to happen. I have absolutely no idea what's going to happen. What I know that I have a higher probability of winning. That's all I know. If this trade loses, I don't care because I know I have to take these other trades. But what people do after undergoing losses, what will happen is that they will want to get back their money. And what happens is that they will think that particular trade that looks very good end up ends up like maybe becoming a bigger winner. And what happens? They'll power up on their lot size. They'll make it big. Why? Because they want to make back their money. That's revenge trading. It's bad. So for you to avoid all that, have one a probabilistic kind of mindset. Make sure that you are looking at it in terms of probability. We don't know which trade is going to win, but we know we're going to win over a series of trades. Okay? And stick to your risk management. Risk one between 1 to 3% of your account. Risk 2%. You don't have to you won't be able to stress because it's just 2%. It don't be very much. Okay? And like you're not trying to actually predetermine your risk, that will actually cause you a lot of stress. You won't be sleeping because you'll be thinking about the trades every time. And that's the step of doom, guys. I've lost money through doing that, and I want you guys not to go through the same. Make sure that you predetermine your risk every time. It's very important. I can't overemphasize this enough, guys. Like, I can't overemphasize this enough. Please make sure that you know exactly how much I risk on that particular trade. Very important. Understand that you don't know, you don't need, actually, you don't even need to know which trade is going to win. You don't have to know that for you to make money in the market. All you have to know is that you have an edge, which is a higher probability of winning than losing. Simple as that. Once you understand that, it will be easier for you to actually execute because you know maybe it's not this trade, but the next one is going to win. If you lose, oh, it's okay. Maybe it's the next one. As long as you keep on identifying you have to continually objectively identify your edge every time before you take any trade. That is going to help you big time. You guys, I really hope that I've stressed this. Like, I really hope you understand how this works. Because if you don't understand this, trust me, I don't care how much money you have, okay? You're going to blow up. As long as you don't respect risk management, you can have a lot of money. You're still going to lose. Because you end up revenge trading, trying to over risk, trying to get back your money that you've lost, and you end up losing a lot of money. Remember, it's not about winning one trade, it's about winning consistently. That's what we want. We want to be able to build our account consistently, not just have that one spike and then you have this spiral going down like that. No, we want to have that consistent win, losses, but we're still going to win over a series of trades. That's what we want. I hope that this is clear, guys, and I hope that you've actually enjoyed and paid attention so that you've gotten something from this. If you have, I really appreciate that. Please, if you also can also help us by making sure that you get subscribe to our channel, like the video, hit that bell notification, comment in the comment section if you've enjoyed this video. Tell us what part of the video you've enjoyed. Thank you so much for watching, and God bless you, and I wish you great trading and have a great day.